Hey folks, this is the week ahead brought to you by Financial Juice, the best squawk service you can get out there, and Earn to Trade, a really great funded trader platform. All right, let's get into it. Yeah, so I've been away for a couple of weeks dealing with something off the desk, unfortunately, and so I am delighted to be back and chatting with the guys as of yesterday. So coming a bit late to the start of the week. Obviously, it's Tuesday when we're releasing this, but yesterday, not really much going on in these markets here. So let's transition over and have a look at some interesting stuff that I've picked up on just kind of over the weekend. And before we do that, let's have a look at the week ahead. So we have, today, what's going to be important, core durable goods orders coming out at 1:30 GMT. This is tier one data. Then consumer confidence at 3 o'clock. And then, Wednesday, the bigger stuff coming through there tomorrow, half one, the GDP for the US quarter on quarter set to come out at 3.3%, prior 4.9. It's kind of interesting that, it seems like the rally in stocks, and it's hard to do, but if you take Nvidia and the Mag 7 out of it, I think a lot has to be pinned on the general amazing performance of the US economy. And so if we start to see some really shocking numbers come through, and I don't know if 3.3% at the forecast for Q on Q tomorrow is going to be shocking. It's got to be sort of priced in at this point, but if I just want to monitor that for what could cause, a bit of a pullback in what has been an incredible rally on equities here. But anyway, we'll get into that probably later on this week in the Duggan Capital room for our subs. But yeah, also tomorrow, crude oil inventory is set to come out 1.8 mil on the build. Prior was 3.5. Pretty uninteresting stuff, really. Thursday, and I think Thursday is the bigger day for trading this week. We're going to get the German CPIs at 1 o'clock, and then core PCE out of the US at half one. And then the price index, core PC price index month on month, also there at half one. And then initial jobless claims set to come out 209,000, prior 201. And then Friday, not so interesting. CPI is obviously out of Europe at 10 a.m. And then manufacturing manufacturing PMIs coming out of the US at 245 and 3. So really for me this week, Thursday is a bigger kind of volatility day to be trading. But let's move on here. Okay, so a couple of articles on oil, and then we're going to look at the Mag 7, excuse me. So yeah, the shortage of oil tankers at hand. This is all really baked in, the Red Sea risk. But what I think is not baked in to the price on oil at the moment, and could have a much sort of more pervasive addition to any sort of tight supply picture. It's not so much tight supply, it's more getting those supplies out and about, right? And so I just thought this was kind of interesting because essentially the nugget that I want to take out of this article is this chart, the tanker availability that is shrinking. So you have these different types of tankers, the VLCCs, the very large crude containers. These bad boys can haul about 2 million barrels of oil at a go. And you can see that, if they're only going to add two of these tankers this year, which, as you can see, is way below the kind of moving average here of additions of oil tankers per year, right? And so this isn't going to change, right? You can't just order one of these things and then it arrives from Amazon in 24 to 48 hours. They take quite a bit of construction and planning these things. So thought that was kind of interesting. Another thing that we kind of have to really be mindful of as we come into the end of Q2, which obviously will be at the end of March, is that we're going to be looking at OPEC Plus to see if they will or if they won't extend the current oil production cuts that they have, which are totaling in and around 2 million barrels a day. Now, this article kind of is interesting enough to kind of read through because if OPEC aren't going to extend the cuts beyond Q2, and they have sort of hinted that they might, but if they don't, that is really going to be a major downside catalyst for the price of oil, major downside catalyst. But at the moment, these seasonal spreads are working out beautifully. Oil is going up, but just let's keep an eye on this as we come towards the end of March, and we look towards the OPEC meetings that may come towards the end of March as well. So. Do have a read of this article if you trade oil. It's going to be really important to know. All right, just want to switch things up a bit here and kind of look at really, why is NVIDIA stock so well supported? Well, we all have heard that it's because of the emergence of AI. But, why is that? Okay, well, ultimately, it's because, and I think, everyone is aware that that we're shifting to GPUs being the high performance processing unit that you need to process AI. So you have all these data centers that are purchasing thousands of GPUs from NVIDIA, and they're replacing them in data centers. But the broader picture here is actually this is a paradigm shift. Think, for how long have we, kind of knelt down at the altar of CPUs, right? And if you're into your computers at all, you would realize that, CPU has been where it's at for since, I don't know, 80 years, right? You got to have a faster CPU all the time. And now we're sort of transitioning, and that was Intel, mainly Intel's space and AMD, to have these high performance CPUs, central processing units. But now the paradigm shift is actually people are going, hold on a second. The CPU is kind of this like, yeah, great, it needs to be fast. It's sort of the sorting brain of the computer. But what really gets multiple streams of information sorted and processed, multiple streams of problems processed at a compute level is the GPU. Okay, so I just thought, to highlight people or highlight this to people, about why this is really a paradigm shift and what NVIDIA are doing is really riding at the front of that wave. Added to that, right? Added to that, I have a really good article here. This is a three-part article from Alex Reinhardt on Medium. And you see here there's three different articles really talking about the relevance of this paradigm shift to GPU from CPU, okay? And I think price target, we've heard price targets. We'll talk about price and stuff now on the Mag 7 in a second, particularly NVIDIA. But, this price targets are like $1,400 a share on NVIDIA. I think that's really, really conservative, really, really conservative. Something I want to add in here as well is a DPU. So, and you'll see in this article, NVIDIA are talking about the three pillars of compute now down here, the three pillars of compute. So the CPU, the GPU, and the DPU. The DPU is the data processing unit, which really moves all the big data around in the data centers and sorts it in the cloud between geolocated data centers. So you've got DPUs at that sort of factory data center level. Then you have the CPUs, which sort of are the sorting brain of each computer, right, and motherboard. And then you have the GPU, which the GPU is like, can take, thousands of streams of computational questions and run them and answer them. Okay, at the same time, whereas a CPU has not really been able to have that narrow capacity. Anyway, I've talked about this way too much. Let's move on. All right, just a little bit of inflation. I think inflation is getting a little bit out of fashion at the moment to talk about. But food spending here for the U.S. Really back to a 3-decade high. This is a source here from the Agricultural Department of the U.S. I just thought this was quite interesting to note. We're seeing food prices everywhere: the US, Canada, Ireland, UK, all rising. And that's sort of kind of just before I go off this is really kind of feeding into why the farmers everywhere are going on strike. Because while the retail outlets are pushing these prices higher, the farmers are not getting the benefits of those prices. The farmers are still getting paid the same for their produce. All right, let's move on. Mag 7, here we go. The Mag 7, Apple, Tesla, Meta, Google, Nvidia, Microsoft, Amazon. All right, just in case you didn't know. So, looking at the Mag 7 here, just wanted to note that the Mag 7 are propping up the US stock market at the moment. There is no doubt about that in anyone's mind. But just to kind of put some numbers on this, so they are up 1,700% since 2015 compared to the S&P of 140%. Okay, that's a multiple of 12 times more than the rest of the S&P for 493, right? Or well, before 92, right? So, I just thought that was a really interesting chart to have a look at here. And you got to imagine that you have to maybe close a little bit of a gap here. But I think that sort of thinking isn't going to get you anywhere because technology is a breakaway sector which cannot really be valued the same way the rest of the S&P can be valued, right? And so I think this will continue and I think you'll be looking at this chart and it'll be probably 20 times more than the rest of the S&P 500. Okay, just on the Nvidia situation here as well. So listening to couple of podcasts over the last week or two while I was off the desk. There's a lot of people likening the Nvidia run that we're having to the upside to the sort of pre-dot-com bubble burst that Cisco had, right? Cisco was in sort of, the high compute space, obviously coming up to the dot-com bubble and still is. But just I thought it was interesting to get this overlay of the pink is the Nvidia stock, and then you see Cisco where we could have this burst. Now, I think even if we do have a bubble burst on Nvidia and tech in general, I don't really see that being a show of the potential, of these companies. I still believe in technology as being, as I said, a breakaway sector for all these markets. So, fine. I think if we have a pop on the bubble that we currently seem to be having on tech and Nvidia, led by the Mag 7, I think, you're just going to get these stocks to kind of come in to value, and then, you just want to be buying that. All right. One more thing before I get onto the charts and have a technical look at everything here is top 10 stocks in the US at the moment versus the entire US stock market. The last time we were at this level was 1931, 33. And can anyone remember what happened back then? Well, it was the largest crash including COVID. It was the largest crash ever on the US stock markets happened when we were up around here. So what would be the catalyst? Right? As traders, we all have to go, well, what would be the catalyst for something to take these markets off to the downside so quickly? And there's really only one that I can think of at the moment because, I mean, look, these markets are priced in a war risk months ago now. Personally, so what is that one thing? I think it's China invading Taiwan. I think if you have China invade Taiwan, I think that's going to be bang. Nvidia chip production is annihilated. Okay, and so all this frothiness is just on the upside, and price is going to get completely unwound. Will it be indicative of value? No, it'll just offer up Nvidia stock cheaper. But just sort of make people aware of this. Throw a bit of food to the bears here. All right, let's see if we can get over onto the charts and have a little looky see here. And so we'll start off with the dollar. been off this desk quite a while, but yesterday I was just looking at some stuff here. So yeah, look, I think the dollar may be kind of trying to find a footing here at the, what is it, 103 spot 6 area to then get on up again. I'll just open up one of my other charts here and confirm that's what I'm looking at on yeah, on Dixie. So I think we could hold on here, but ultimately I think we could probably get up to about 105, somewhere up into here, this area before, probably before kind of summer kicks in. But as things go at the moment, I think the euro, while we've had a fantastic pullback over the last 2 weeks on the euro, I think it may be sort of time that that gets cooked. So yeah, just having a shape of Dixie, while look, it's back within this range, sort of 103s, even up to 103 spot eights. But I think it's a difficult trade for any for a duration to hold for a couple of weeks, for example. But I think ultimately we're going to see some strength coming back up here. Then yeah, one thing I have to mention is Bitcoin, which I'm not usually cover here, but yeah, I totally got Bitcoin wrong here. I thought when we were down at the 42s, I failed to note that we are actually not closing any of these weeks here below the 42s level, any of these weeks here. Actually, there was probably 2 weeks there that we closed below the 42s, and we just rallied ever since. So looking at Bitcoin here, strap in. Everyone get their seatbelts on, because we are looking for this on Bitcoin, and it's going to happen. I think 82s and 90s, price in for 90s. I mean, obviously you have this all-time high here on this continuous price chart of 69,146.5. Call it $70, and we're definitely going to breach that to the upside. You had a really fantastic day up there for Bitcoin yesterday. All right, moving on. The Russell. No, we're not going to look at Russell. Just look at SPOOs. Important to note there on SPOOs yesterday. Didn't mean to do that. Let's get over here. Yeah, on SPOOs, I mean, just fantastic stuff here from equities, fantastic run to the upside. But how long can it last, I ask you, really? Probably a little bit more. Down day yesterday, there was some nice shorts, and I'll have a look at that in the 30-minute in a second here. But we generally seem to have a step at the 50-31s, which was the prior all-time high, non-back adjusted. That's non-back adjusted all-time high was at 50-31s. Seems likely that there could be a step there that buyers would maybe want to buy off of again. But really, for me on these equities, I'm just really able to, get edge in the daytime frame. I can't really swing anything the way these markets are so up at the moment. Yesterday, lovely harmonic pattern came in there just as I was coming off the desk at 4, popped back to VWAP, but it was balanced down. Sell that thing, break the trend, pull back on the trend here. Resistance, bang, down. Easy peasy. I wasn't trading that. I was trading a little bit of Russell for the first time in a couple of years, actually, yesterday, and it was a bit of fun. Dow, similar stuff on Dow. Really, again, we're up here, right? And so, I just think the Dow, it's really hard to cut it either way, but it's going to have to hold 39,110s, and then looking for the long to get back up and test at least 39,210s in today's session. I think there's better products to be trading than these US indices at the moment. Most people are going to be long the ETFs, long the Qs, long the SPOOs, index trackers, stuff like that. And then a lot of the prop traders are going to be essentially just like not looking at huge higher time frame charts. They're just going to be making in and out in the day session. So anyway, moving on to oil here. So what I'm looking at on oil is really, I talked about it before I went off the desk to my guys, that if we trade 73s again, that is just tremendous value to be buying to then get up here. And a lot of people would be saying, well, yeah, that's pretty obvious, Tim, but I think oil, as you can see, for us yesterday, was short. Actually, we're short on this test here in and around the open. Short on the P-Val, it was about 76, 64s at the time. Short that back to VWAP, done. Nice little trade there. I think what was the risk reward on that? Yeah, it was about 4.8 to 1 on that trade. And then, of course, the market did have a lovely support on the 76.18s to pop up into what we had there as a 78s even, which is the B 1.5 for if you know, you know. And we're just dissipating back down. I imagine that we're going to be looking for support in that 76.90s yesterday. Quite a big level that we pushed up through, found some support. Sorry, you might notice I have a cold here. Um, so that's really what I would be looking for on oil today. I don't actually like buying at the 76.88 because ultimately I think oil does want to come back down to about 74.66 in around here. All right, in and around here on the daily chart. So ultimately, I think this may get broken on a retest. We could find ourselves back down at 75.25s today. You got to imagine what would the catalyst be for that. But I'm not looking to swing the baseball bat today too hard. It's not the most interesting day of the week for me. And then gold, yeah, just a quick. We'll finish off on gold here. Here's really why I like the 2040s area. So I'm not going to be hiding what I said with on a chat with Jason. I liked 2049s as a potential support area. I think we were having that chat somewhere around early February, which is around here. And as you can see, it broke down there, finding those buyers down at the 1997 level, which is these are non-back adjusted charts now, guys. Okay, so that 1997 level was high at the 17th of April 22. Okay, I find non-back adjusted charts give me a lot higher accuracy on the support and resistance levels. And you can see there we did have this turn. I wasn't on my desk when this happened. Lovely push back up to that 2039s, 2040s area here. And then we're now, as of yesterday and the APAC session today, we are up off of that 2039s as the low of day. And you got to imagine that it's going to be higher into 2063, so on and so forth now. And I think, yeah, look, if we can hold this 2039s, I think the risk reward to the upside is magnificent, to use a term of our times. So yeah, Nat Gas. Look, Nat Gas is totally screwed. I'm not going to bother looking at that. And if you're going to be taking those longs in gold, you want to really have a look at the bonds here. And so the bonds, yeah, you could have a pullback to the 110 24s, but ultimately this thing is goosed for the downside, and I think it just needs to come back and trade 108.22 halves. And if it does, that kind of puts a complication on gold to the upside because, bonds down here means that real yield will rise. If real yield is rising, then that would be indicative that gold will be under pressure and not able to rise too. So, sometimes the whole picture doesn't fit together and you just have to take a trade. All right, I'm going to wrap it up there. Listen, thanks a million for tuning in, and I will talk to you on the week ahead next Monday. All right, keep it tight. Have a great week. Cheers.